following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Friday night here in Asia. Hope you guys are having a good Friday morning. Getting ready for the weekend there. It's kind of already the weekend here, in my opinion. This is the cool thing about being here. Is like you kind of got to ease out of Friday night, and then you almost or can have all day Monday before you get into Monday night, which is the U.S. Monday morning. It's kind of a trick you into a 3-day weekend kind of feeling. Interesting. And we're going to get right into the Shanghai and the Hang Seng really quick. This was, man, I had some phone calls today. This is crazy action. So here's the weekly view. Let me pull up to Shanghai. Here we go. Here's the index itself, and what a crazy week. But let's just kind of drill down into it. We talked yesterday about getting below that 47.22 area, and then just kind of there's really nothing to do until you found support or got back above that 47.22 area. Okay, look what happened. This is the top of our box here on our daily, 45.15. Guess what we hit today? 44.31. So let me just take a quick look at that. In a volatile situation where that was a combined, good Lord, what was that? I mean, I'm still astounded here by the numbers. I think 12% pullback at one point, 24 to 36 hours in an index. That's kind of amazing. But guess what? Finding support around those inflection points is a really, really good reason why you sit tight and wait. And why do we sit tight and wait? We're just going to go through a little bit of a primer here. This is yesterday's 240 action. There we go. Talked about waiting. We couldn't get back in the order on the north side until we got back above 47.22. So it wasn't on sale down here yesterday at the 46.20 area. So we ended up waiting, and then you come down and you look at longer term inflection points for the more powerful setups, and we reach that, and that's kind of where you start looking at the nibbling situation on the Shanghai, and really bored itself out today, which is really, really cool. All right, so as we move into the Hang Seng really quick, I'm a little scattered here. There's a couple of messages going off. Hang Seng, the situation here now, we've broken stride on the daily profiles. Yesterday we ended up there, and now we're closing at 27,144. So right now on the intermediate is kind of a little bit different situation than Shanghai. 27,606.27. Okay. And some of our weekly numbers on these things aren't reflecting those prices here. We're a little disjointed. So right now, again, breakdown on the Hang Seng below our daily profile. So we're going to have to pay attention to that moving forward. Not for the faint of heart trading the Hang Seng futures, if you ever take a look at those. We're going to take a look at the yen as we kind of peruse Asia really quick here. Again, you know, we've looked at this. We've tried to find reasons to take some weight off of this. Here's the daily, no new profiles appearing. Here's the situation on the 240, still trading above profiles. Remember that profile appears below price action. It's a very bullish connotation. Trading 123.90 right now, and not a lot of reasons to take this trade off still. No new information appearing on the long term or the intermediate, and the 240s talked about being stingy below 123.28.29, so that's still the case on the yen. We're going to take a look at the Aussie dollar. This was something that met our targets almost. 76 down here. We reached a low this week of 76.17. So let me pull this up here. So let's just verify that here. Yesterday, 76.17. Very close to 76 in general. Hadn't shown any orange bars, new profiles attempting to appear. Here's our 240s. Kind of looked at this yesterday with a new profile attempting to appear. It did appear. It's locked in, and not a lot of bounce to this. So, again, I think the major move's been made. I mean, we may kind of rattle around here a little bit, but pulling back into the long-term view on the Aussie dollar, we pretty much got into that inflection point. For shorts, you'd love to see that thing compress a little bit around that 76 area. Not want to get away from it, as it looks like it doesn't want to get away from it now, and we may bust through these recent lows here. Remember, things on their lows go lower, things on their highs go higher. These classical technical analysis patterns, the double top, the triple top, the inverse of that. These markets get a little bit exaggerated, and these currency moves are pretty much historical right now. The yen's making 12-year. And we're disconnecting from our servers. Sit tight, guys. As we go into the dollar, I feel like it's a commercial when we have a connection to those super problems. You know what the cool thing about Coke is here? They got a Coke factory or plant or whatever you want to call it right up the road here, and it's right in the middle of a cane field. And if you don't think the sugar version of Coke is good, come on over. Here's a dollar situation. Again, nothing new to talk about here. The 95, 95.5 area we got above there finally. Orange bar attempting to appear here now. A little bit of a caution sign. Here's the 240 situation. Talked about this 97 area below there. Maybe, that's kind of as we regulate the trade up with the 240s, that's going to be something to maybe call it quits for a while on the long side. Just got to pay attention to that number right now, considering you've also got new supply coming online on the daily. You can always get back in the trade if you get stopped out or kind of profit stopped out below the 97 general area. 96.79 to be exact. Here we go. Let's go down some of the other usual suspects, and then we get into some specific stocks, earnings stocks, basically. Here we go. This is the situation. 2010 holding, 2011 holding. Any types of breakdowns, we're going to have to pay attention to this. Any type of breakdowns that we can get below 2010, we're going to have to look at seriously. Initial targets about 2099. Brett's situation is this. I'll wait for this to come up here. Here we go. I'm going to go to our daily. And this is how we're not going long the index right now. We're still flip-flopped around on the breath situation. Not a lot of guidance, not a lot of leadership. Let's take a look at our breath charts. Still negative here. Not the type of situation you want to see to go long and have some deep convictions. We've been talking about that, and it's just amazing. I mean, most of the market is not cooperating with this kind of above box situation right now. And you can look at this. This is a very rare occurrence that this happens. This is our daily situation. Daily breath negative. I think we're going to have another leg down here. I've been saying that. We're looking for short opportunities. We're passing on the long opportunities. So, as we keep going down the usual suspect list, let's just kind of cover all the bases quickly on the first segment. 10-year, we've been talking about this from the long side. We talked yesterday about this compressing up into the 127.29 area, and not what you want to see from the short side. And again, I'm still a big fan of going long treasuries, believe it or not. I mean, my stops on a long-term intermediate basis, you've been watching the show, below 127, just sticking to that. That's the bottom of that DMZ we always talk about. Let's cruise down and get into gold really quick, really just super uneventful. I don't have to tell you guys that. We're going to just cruise right past it. Silver, very similar situation. The trade I really like, if you guys have been watching the show, I'm still a big fan of. I love this soybean trade, the November beans, new crop. Love it from the short side. Not a lot of reasons to get out of this trade. Ouchie. Put your stops in on the bean trade, though. Above 910, I think. Could be a little bit more stingier, but above 910, I think you got to sit on the sidelines for a while on the short side. But I think we're going to have another leg down, and I'm looking forward to it personally. Let's hit the crude oil scene really quick. Here we go. Talked about this from the long side a little bit, trying to wait patiently until we got above 57.94. That's happening. I'm looking at this as support. There's a lot of bearish news out there on crude oil. And if you step back a little bit and kind of look at what's happened here, we're really holding up relatively well. And that's kind of the way I'm looking at crude oil. I'm just kind of being a little stingy here, still getting stopped out below 57.94 based on my appetite for risk. And remember, the theme of a lot of things that we do is lose a little, lose a little, lose a little, make a lot. This is maybe a lose a little again, but we're just playing the odds and trading, and that's the way it goes. Let's take a look at the XLE related to crude oil here. This one, that relative strength trade, 79.11 down to 78.97. We had to sit on the sidelines. We had some reasons to get out of this trade a little earlier at 80. We talked about that on the weeklies, and now pick a battle again around the 79 general area, but now it's time to just sit tight and let's let this thing at least get back in the balanced area before we start taking a look at it from the long side. Right now, it's just kind of a no trade. All right. We're going to take a look at December corn really quick before we go to break. A little bit of action on this yesterday, kind of climbing back up a little bit. Here's the weekly situation. 377 is going to be a big leverage point for me on the short side for this. Doing a little bit of a double bottom kind of bounce here. I don't have a lot of big faith in this. I'm still looking at 377 to lay the wood on the short side on December corn. Guys, we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Amazon, looking at it right now on the screen. They say they're coming out with their own food. Not a lot of action off that announcement. Here we go. 419 unfair lows, 434 unfair highs. That's kind of the range we're in right now. And if you're going to trade any breakouts, I would just consistently wait for that to happen outside of that balanced area right now. Not a lot of direction. You can do some range trading in there, but I don't know how that. I guess the announcement, nobody gives a hoot about that. We're trading 427 pre-market. That's just random noise, I guess, right there. Let's take a look at General Electric really quick. Believe it or not, I get a lot of emails about this, and one of the things that a lot of factors here don't really show on the screen a lot of times. We've got some dividend plays going on. It's not the day trading stock that is going to give you a lot of ways to ring the register intraday, but like there's, hey, do you think it's breaking out again? We got that big spike up. We got a new balanced area. No, I don't. I'm actually pretty bearish on the stock market in general right now. And as we look at the daily situation, obviously we're kind of ramp up, consolidate a little bit here back in the profiles. I just if you're a long player investor, I just, if you want to be stingy about it, stops below 27. But I'm looking at most stocks right now from the ripe short side. And as we kind of talk about that, where's my scanner here? I thought I was losing my mind. What I'm doing specifically, because of this breadth situation up top, And this is our S&P grid here. I just went to my indices and I drilled down into 14. We got 15 indices up here now. Wow. Great job, Michael. You got another one up. Here we go. So as we look at our S&Ps, for instance, and by the way, when you get this, been doing some coordination. You can sort these weekly breaths, daily breaths, 4 hour. Just kind of keep going down the line. Let's just look at the 1 hour. All right. So as we look at the daily, we can kind of get an idea. We've got a little up down arrow to show you whether the index is up or down for the day. I'm going to go below the box here on the daily and the daily and weekly. I'm going to show matching results. Got some candidates here, some real awful looking pieces of crap. Fossil, kind of hate that company. How we doing? Video deteriorate. Okay, so let me turn off our video here. Is that helping things out? Okay. Sorry, guys, got a little technical problem here. All righty, so Avon Products, Alcoa. Let's just kind of go down the list here. Alcoa. Let's just try to find out some of the stocks that may fall apart fast. And Alcoa. So here we go. Alcoa's been on the list, the short list, for a while. We've kind of had quite a few reasons trying to sell resistance. Kind of showed its hand early, hadn't been cooperating with the market. Latest move up. So found some resistance at 14 again. Talked about this about $15 stock. Are you supposed to be shorting a $15 stock? It's a stock. It's showing weakness. My answer to that is yes. When you have the opportunities, now you're getting really cool with this below 13. Now that's a massive leverage point. This is the weekly. You can orient stops above 13 and especially above 13.37 on this. I don't see any reasons to take this short trade off. We're going to go back into the scanner. Avon Products. Don't know how that ever worked out, but ABP, Best Buys. These are kind of the same names that some of the same names that we've been speaking about every once in a while. Chesapeake Energy. There you go, Jay. On the dog list. Family Dollar Stores. Let's take a look at that one. FDO. All righty. Okay, so kind of a cool scene here now. Finally starting to edge a little bit lower here below these weekly profiles. We're going to talk about Family Dollar in just a little bit, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Had an email about this one. New York's Community Bank Corp has held it since 2001. I don't know what it's like to hold something that long. I'm sorry I guess it's had a pretty good run here. I can't go back to 2001 on the fly here. Here's the daily situation. You know what? I don't, talking about scaling out, I'm just not seeing a reason to scale out of this. I think the market in general might pull back. This is the 240s. But, I think the only thing you've really got to look at from a kind of break the stride from the long side is this thing starts closing on a weekly below 1620, considering how long you've held it. Depends on how stingy you want to be. Below 17, you got to start kind of taking the look at the sitting on the sidelines a little bit. That's the DMZ 17 to 1737, but 1620 and below 1620 is going to be some form of technical damage. It's going to be some form of technical damage. I was reading the Den comment that you're going to have to pay attention to when it comes to New York Community Bank. I can't say that right today for some reason. We took a look at some of the dogs on the scanner earlier, and Avon Products, AVP. Let's see here. Here's our weekly. This has been on the, I can't say the crap list for a while. This is our weekly. And my goodness. Ooh, ouch. Hadn't given you a lot of reasons to get out of the short trade and hadn't been too many reasons on the long term to try to even get your toe in the water on the long side. This is why these profiles really kind of keep me from doing stupid things. I don't know how other way to say that. But right now, it's not on sale. This has been eternally on the scanner in one form or another, and it's not been on the scanner from the buy side. It's been on it from the short side. So if you're messing around with Avon, I mean, and you're trying to double up and do that, it's just, I hate that term when they talk, these guys get on there with the white shoes and the tie and talk about dollar cost averaging and staying in it for the long term. That can get extremely ugly if you play that game. And this is a great example of getting ugly. And maybe the forecast is uglier. This is Avon. This is our daily situation. So not a lot of reasons to try to get in here on the long side yet. And this is one of those stocks that may end up going to zero. You never know. So you keep doubling down on this, hoping for a pop to get out. Guess how many people are trying to do that right now? So there you go. Best Buy, BBY. Another one, eternally, seemingly on the scanner short list. Been like that for a while. Been bouncing around below profiles. Started around this 36.49 area, and then we kind of got the retest down below, and now we're back down below 35.24 again. That's where you can orient stops above that 35.24, in my opinion. And the cool thing is the long-term navigator is getting ready to cross zero here. May have some market help on Best Buy company. We're going to take a look at Chubb Corp, CB. Again, we're trying to take advantage of. We're trying to take advantage of some of the possibilities on the short side here because we're thinking about a possible market downturn. 98.90 Chubb, that's where you got to orient stops above. In my opinion, on the long side, we've closed below. We're kind of going back and retesting these daily unfair lows. I'm going to show it right now. Remember, get below, go back and retest. Coca-Cola's coming up. We're going to take a look at another one. We're going to take a look at this just to throw it in Jay's face here, Chesapeake Energy. Don't even know where they're located, sad to say. Here we go, CHK. All right, so this is one we're going to, this is one that hasn't participated in the XLE type of relative strength trade on the crude oil side. And right now you're seeing it race for the lows again. Here we go. Here's the daily situation below that 1455. This one's not the one to kind of pick up on sale. I'll say that. And stops can be oriented above that 1455 area. We had a pretty damning day for this yesterday. Oklahoma, possibly. I think you're right about that. All right, so let's take a look at Fossil. These are kind of the dogs to possibly take advantage of here. FOSL. I got a Fossil watch. It tore all to pieces. I bought it and was trying to be cool for once in my life, and the watch just came apart. Just a little personal information on Fossil. Here we go. This is our weekly situation. And again, we broke down below. This has been the one that just, tough situation to try to buy and gave you a lot of reasons to short it. And now we're just really, really going into a hole here. And let me just tell you why that's a hole. We don't have a lot of former profiles down here. And when things get into a hole situation, they move relatively quick. Do we wait for retracement back up into some inflection points to look at this from the short side again? Yeah. Could this be the throw-up move that this particular stock was looking for to possibly reverse? I'm just terrified to try to buy things like this. And right now, it will be great to have some bottom fishers come up here and kind of rally this thing back. But right now, I'd take a stab at 77 and then try it again at 82 on Fossil on the short side. Let's take a look at Coach. This one's been one that we've kind of had our eye on. Wow. This thing got hammered yesterday. Here's the situation on Coach. Kind of Custer's last stance on the weekly, around 40. Now we're trading 35. Here's the daily situation. You know, these are, I'll tell you right now, these are blocking out the long side for me. But, you know, you really want to wait for some retracements and inflection points or some new inflection points down here to try to short these things. I didn't know they were getting crushed that bad. Here we go. Take a look at, let's just pull up Joy Global here really quick. All right, we're pretty far below. L3 and lows. Let's just take a look at triple L and L. Here we go, Lowe's Corp. And again, the reason, if you're joining us late, the reason we're looking at a lot of these stocks from the short side is we're trying to find weak stocks in a market that may roll over. And this market may roll over based on our S&P breadth just looking really, really, you know, not cohesive with what the market's been doing, kind of drifting up. So, you know, I'm looking for a market pullback, and I want to, if the market in general keeps rallying, I want to be in stocks that just can't get out of their own way, that won't hurt me that bad from the short side. So I think there's some opportunities here. Here's Lowe's Corp. Again, a stock that's been underperforming the market pretty significantly. 40.73 stops above there is what I'm looking at to kind of keep this on the short side. 40.62 and 40.73 is that DMZ to kind of leverage against. We've already hit that this week, rally back up into it. That's a good sign. Could have a little bit more downside on Lowe's Corp. Here we go. Let's take a look at L3 Communications. All right, here we go. It's a $120 stock. I like this for more downside movement because we had that profile appear above price action on the long term last week. Couldn't hold it, couldn't get into that fair auction, and now, to me, let's drill into the daily. I like this. Of all the stocks we've looked at, I like this the best from the short side, believe it or not. And I love putting stops above that 119 area on L3 Communications. You got to be out of this thing above 121, though. I'll tell you that. You can, you know, put some stops to be stingy above 119, but I think you got to be completely out of this on the short side above 121. It's another one that's kind of been on the radar screen on the short side. NSC, again, coming right out of the scanner. Ouchie, mama. Ooh. Yeah. Not a lot you can do with this down here. You need some leverage. I'm pulling it up from the scanner, but if you go into the scanner, you're going to see, let's go into NSC. You're going to see quickly on the landscape, you don't have anything to hang on to down here. There's nothing to leverage against. Rallying back into 98, I just think that's wishful thinking. That's probably not going to happen. So we're going to pass on this right now. It's not a lot of leverage. And this is an interesting one because we go into Leg Mason. Let me pull it up here. Leg Mason sitting right on these two inflection points, weekly and daily. This is really cool. So let's take a look at it. And we can take a look at all the stocks doing that in the S&P 500 all at one time. Come on, Leg Mason. All right, so here we go. Here's the weekly view. Man, I like this. Ooh, this is the kind of thing that could give it up quickly. Man, here we go. 53.66 unfair lows on the weekly, and 53 looks like 66 unfair lows on the daily. Let me see, man. 53, yeah, wow. I like this, guys. I like this. I like, you know, actually hitting this on the short side if we can get some momentum below 53.66 on the opening and putting the stops above. And what I'm going to do now is I'm going to go in here. I'm going to change our sort because these are stocks that are kind of sitting on the precipice here. All right, let me just change this to no sort. Actually, let me change that to weekly. Boom, here we go. So we've got Legg Mason, Noble Energy, and Procter & Gamble. So let's take a look at Procter & Gamble meeting those two criteria on the weekly and daily. All right, so Procter & Gamble, PG. This was on our list the other day. Yeah, me likey this one too. Procter & Gamble. Talked about this getting below the 83 area. Hitting the offer on this one. Excuse me, hitting the bid on this one. Hitting the offer, hitting the bid. Excuse me, on unfair lows on the weekly 82.64. We talked about that, and we talked about that back in this area. So remember when we started breaking down below the weekly and daily, this was this. We had plenty of short opportunities going into resistance. Now you've got another leg down, breaking down below profiles. And the scanner was just alerting you that we were at the precipice on both of those different time frames. So we're going to take a look at Noble Energy, NBL. These are the ones meeting this type of criteria. NBL. Here we go. NBL. Well, this thing has ridiculously come off the 50-55 area, and again, we are sitting below profiles here on the daily. But the good news is on this type of trade is now we're just kind of drifting below weekly profiles, and I'm not sure, but I'm pretty confident that we would make a run for the lows again at the very least. And you've got this leverage point here on the dailies and weeklies now to pay attention to on the short side, 44.35, stops above, and continue to maybe play that game below every time we migrate down below again. Let's take a look at Walmart. This has been something on my radar screen for a while. You've been watching the show, you know what I'm talking about. Here we go. 77.89 is the latest breakdown. Here's the weekly. When we started talking about this, we were closing below, rattling back above, retesting that 83.5 area. Now what do? We're trading 74.84 pre-market. Looks like 74.85 pre-market, excuse me. And the dailies have kind of regulated this trade down since we broke down below that 83, what's that? 83.5, okay? So on Walmart, a pretty big 83.5 stock. We've actually already got 9 or 10 points in this thing. And what do you do with it now? It's not on sale yet, guys. It is not on sale yet. We're using the 240s to guide this down, and new profile appearing above price action twice. That's very, very bearish still on Walmart. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're taking a look at the Canadian dollar right now. Talked yesterday about not a lot of reasons to get out of this. Here's the Canadian dollar, got above that 121 some change area, and it was kind of okay to get back in the water again on the long side. But right now, here's the 240s. Man, oof, devaluation. Let's take a look at the euro. This is a different situation. Weekly orange bar down here. Pretty much guaranteed almost. Today's Friday, stays orange. We're probably going to have a new profile appearing, which is awesome on the long-term weekly. But we talked yesterday a little bit about the orange bar, the hint, if you will. And now, lo and behold, we've got a new profile appearing. And you probably could stand to sit tight on this one right now. I mean, this is something, again, you know, we've got the orange bar. That's a great indication that we may have a new, in this case, demand area popping up, and we may have some ricochet action in a balanced area here, and that's what's going to happen right now. Here's the situation on the currency. There's the USD, EUR USD. There's that kind of peel back happening now. I think we had 3 of these lining up yesterday, the peel back on the EUR USD, and that was kind of a really cool sign on 3 time frames that was happening. And look what happened. We had a little bit of a move up. So long-term, guys, I don't think you're in any form of danger whatsoever, but you might want to save yourself some trouble with this thing rallying back into 111. That's going to be the maximum selling point now, that 111 area on the euro itself. Okay. We're going to take a look at one more currency really quick. This is, again, one that really we had a decent bounce there, and came back into that area. That's not what you want to see from a long side, is reversing that much in 1 week. But again, that was an area to pick a battle. 154.60. Again, lose a little, lose a little, lose a little, make a lot. Here's where the stop's got to be below 54.60. Started having the technical breakdown on the dailies a little bit before that. So again, it was a little bit more lean towards the short side on the British pound. I don't see any reasons to take this off right now. We are getting into a major pivot point on the weekly right now around that 152.75. Here's the 240s. Had a couple emails about this. That's why I'm kind of going through the discourse here. This is a 240 situation. So stops could be oriented above that 153.63, but not a lot of reasons to take this short off right now. Just don't see it. Let's go back into the S&Ps really quick. Again, I'm pretty neutral to bearish on this market, and why? If you guys are just joining the show, S&Ps, daily view, intermediate view, we're just getting into negative territory on the breadth. We're a little mixed up here. This is showing a disconnect in the internals, and I'm thinking we're going to come down and probably get back down below 2100 again on the S&Ps. The ripe area to start leveraging that is more than likely getting below 2110, 2111. Then you've got 2100 to deal with. Short-term traders, and get below 2100, I think we could actually start shooting for some much lower numbers, namely 2068, 69. Guys, you've been great. Stay tuned. The deck is stacked on TFNN. We'll be back again Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.